How did Warren Buffett turn $10,000 into $15 million? The old-fashioned way. He has no computer, no Quotron screen, only common sense and a set of strict principles. We'll look at the Buffett formula for investing, and we will hear his wisdom on everything from the stock market to the evils of inherited wealth in a moment. First, here is how the man known as the Wizard of Omaha got his start. Buffett's interest in the stock market came early. His father, Howard, was a stockbroker until he was elected to the United States Congress. Howard Buffett was a frugal Republican. When Congress voted itself a raise from $10,000 to $12,500, Howard Buffett refused to accept the additional money. Warren, meanwhile, bought his first stock at age 11 and made a $5 profit. He eventually attended the University of Nebraska, then was rejected by the Harvard Business School. So Buffett went to New York and the Columbia Business School, where he met Professor Benjamin Graham. Graham was not only the co-author of the classic Security Analysis, he also wrote The Intelligent Investor. Graham preached something called value investing. Find companies that are undervalued by the stock market, buy shares, and then hold on and wait. Warren put those theories into practice. At age 25, he formed his own investment partnership and began to buy stocks. An investor who put up $10,000 when Buffett began the partnership in 1956 had nearly $300,000 in 1969 when the partnership was dissolved. During that time, the Buffett partnership never had a down year. One of the companies Buffett acquired during his partnership years was a small New England textile mill, Berkshire Hathaway. He later sold the mill but kept the name. Buffett began investing Berkshire funds in the stock market, and in some cases he bought companies outright and made them part of Berkshire Hathaway. Berkshire Hathaway is now a holding company with a net worth of more than $3 billion. Last month, Berkshire Hathaway held its annual meeting, presided over by Buffett and Vice Chairman Charles Munger. Buffett believes it's very important to have patient, rational shareholders, since it's one of his tenets that Wall Street's obsession with the short term and with frantic trading are counterproductive. So Berkshire has never split its stock, and Buffett never talks to analysts, but this is the happiest tribe of shareholders you'll meet anywhere in America.
Warren Buffett is certainly the greatest investor in the post-World War II period, and maybe the greatest investor in history.
I think he has tremendous integrity and a very, very clear way of looking at the world. The superlatives could go on and on and on, and I'm not related.
Berkshire Hathaway shareholders have every reason to be happy. One share of stock cost $12 in 1965. Today, a single share sells for more than $3,900. That's right, $3,900 a share in the over-the-counter market. Buffett has achieved all this by sticking to... Buffett took full advantage of that undervaluation. In 1973, he bought 1.7 million shares of the Washington Post Company. As a boy, he delivered the Washington Post. Now he owns 13% of it. That investment cost Berkshire Hathaway $9.7 million. Today, it's worth $370 million, and Buffett says he'll never sell his shares. Another of his permanent holdings is in Capital Cities. In 1985, Buffett bought 3 million shares of Capital Cities when it took over ABC. That investment cost $517 million, and it's now worth $927 million. The chairman of Cap Cities is Tom Murphy, Warren Buffett's good friend. Another killing came in a troubled company, Geico, Government Employees Insurance Company. In the mid-70s, Buffett bought 42% of Geico at a cost of $46 million. The value today, $849 million. Last year, Buffett made just one major investment. He bought a convertible preferred worth $700 million of Salomon Brothers, the New York investment banking house. It's far too early to tell whether this investment will be another Buffett coup. One thing all these deals have in common, the stocks were bought because Buffett thought they were undervalued by the market. Warren Buffett, the investor, is only half the story. There's also Warren Buffett, the manager. Through the years, he's bought not only pieces of companies in the stock market, he's also bought entire companies, which are now under the Berkshire Hathaway umbrella. These companies are not very glamorous or famous, but they are usually tremendously profitable. One example is See's Candies of California. See's has been making candy for more than 60 years and is known for high-quality chocolates. Berkshire Hathaway bought the company in 1968 for $25 million, and last year alone, See's earned $30 million before taxes. Another Berkshire Hathaway company is World Book Encyclopedias, $26 million of profit last year. Berkshire Hathaway also owns Kirby Vacuum Cleaners, the Fetchheimer Uniform Company, and various insurance companies.